Happy day after Nvidia earnings. It is episode 9 of Charts and Checks, where we talk about three stocks from a fundamental, financial, and technical perspective. Here with you, as always, we are your two hosts. I am Don Foyani, the gorilla with glasses, and we have Alvaro Pereira of the Bilingual Stock Market channel. How are we today, Alvaro?
What's up, buddy? I am doing
well,
fantastic,
man.
per usual.
Yes, sir. Yes,
Were
sir.
you
Another
surprised?
fantastic report from Nvidia.
I mean, it has a good support at $180, so you can also say that.
Yes, no, they definitely found some buyers. I think it closed today slightly negative, but interestingly enough, many other semiconductors ended the day positive. So in my opinion, it was a win for the AI CapEx story.
Sure, for
Sure.
sure. Yeah,
Fair
the
enough.
demand is still there. Yeah, 100%. And in the case of Nvidia, it was like a football game in which Nvidia had to play with 9 players.
Right. And for those that are not
Do you,
familiar,
do
how
you
many
know?
players,
Do you know what I'm talking about?
how many
I guess
players are there normally, Alvaro? 10?
11.
11? Shoot, my bad.
Correct.
So they pulled the goalie, and they had someone in the penalty box.
They couldn't do anything China related.
No.
They couldn't
no.
provide any guidance
So-
about China sales. So it was like, I mean, if you think about the fact that they couldn't guide on China sales, I mean,
And they still beat.
It's incredible.
They
Incredible
still beat.
because the report was very good, actually.
Yes.
Yeah, that's it.
Yes. Talking about the report, going into it, I mentioned to, people in your Discord and people that follow me on social media, as well as those on the Gorilla W Glasses website, that I was looking for 3 things. The first thing being data center revenue, the second being the guidance, and the third being margin. So I'm just going to run through those. You've set it up really, really well. As far as
Gross
data
margin,
center,
gross margin went up a lot quarter over
Yes.
quarter, right? From
Yeah, so-
65% up to 72 or something.
yeah, we could actually start there. Non-GAAP and
Right.
GAAP margins landed around 73, 72%, high 72%. That comes back from a 60% in the prior quarter. This was the rebound that was needed. To me, it's important because a lot of people can't resist comparing Nvidia to Cisco and talking about how this is just like the dot-com 2000s bubble. I would say one of the huge differences is that all these companies make money, have actual profit. And when you look at the profitability profile of Nvidia, that is what's going to separate them from times in the past and separating them from being lumped in with these bubblicious concerns.
Yeah, it implies that the demand is still there, of course.
Well,
I mean,
just like
a
it's hard.
72% gross margin is, I mean, it's very impressive.
It's insane.
We're
It's-
talking about the largest company in the world. This
Yes,
is-
with a 72% gross
unbelievable.
profit margin.
yeah, it's,
Yeah,
it's
no,
crazy.
it's real money. It's real money, and it's hard to argue that we're in a 2000s-esque bubble already when we have the money being made and minted the way we have the money being made and minted. So the other thing, let's talk a little bit about the data center revenue, or the data center revenue in general. It is on track. Throughout the call, I think they did a really good job explaining that both the Grace Blackwell, we'll call them the GB series, and the Hopper series, the H series, are both selling, despite the fact that the GB outpaces the H series by at least 10 times with the latest iteration, with respect to inference specifically. One of the concerns going into the quarter was how well the transition from the GB 200 stack to the GB 300 stack would be. And everything they said made it seem as though it was seamless. And part of that is thanks to CoreWeave. And we'll talk a little bit about that soon.
And CrwD was mentioned, right, during the press conference, I
That
think?
is how they were mentioned, correct. So they are
Wow.
actually going to get what
I mean,
appears to
that's
be...
a super bullish. That's a super bullish fact.
It
if
is the... Well,
if Nvidia talks about you during the press conference, it's like, I mean, what else can you ask for, right? I mean,
No,
wow.
that's the biggest, that's the most
Unbelievable.
bullish call a company could have, is someone from the Nvidia conference call says that your company is involved with something Nvidia is doing.
Yeah, and
In this
CrwD
case-
went up. It went up today 6%. So I mean,
I think it was up 10%
Facts.
at one point today. It
At some
had a
point,
day.
yeah.
It had a
correct,
great
it had
day.
a day. Yeah, and rightfully so.
And-
We should argue.
Yeah.
Okay.
Yeah. Within the data center revenue, they have a sovereign business that, despite China only representing low single digits as a percentage of the sovereign business, is up to 20 billion, which isn't nothing. That's off a very, very low base. Singapore made up 22%. This is only interesting because in the past, Singapore has been accused and more or less found guilty of transshipping these to China.
Okay.
So it's interesting that they're 22%.
So Singapore is for the most part a middleman, right?
Yeah, I mean, China's paying a huge markup for these chips from Singapore, without a doubt.
Okay.
Yeah.
I don't think they need so many AI-related chips in Singapore, right? Like, so they are. I mean, let's face it, they are a middleman, and China is it's an important piece of the puzzle for Nvidia here, right? So
right.
Dan Ice was talking about that earlier on today. He said that Jensen needs to figure out a way between Washington and Beijing because Nvidia needs China. So,
well, let's talk about that. That's a really interesting point. They need China not just for the sales. They need them because Jensen understands that if Nvidia can win over the developers, ensuring that all these AI applications are built on and optimized for Nvidia GPUs and the Nvidia platform, he will solidify the company's dominance in the AI space. Another way of putting it is just to say, if you win the developers, you win the war. He's positioning his company to be more than just a GPU, CPU company. He's positioning it to be the leader in the AI hardware build out and infrastructure. And if I remember correctly on the call, he stated he believes that 50% of the AI researchers in the world are located in China. So it's a very important market from a long-term perspective than just to him, it's more than just selling GPUs. To him, it's making sure that the future of AI is ridden on NVIDIA platforms.
All right. Perfect. Yeah.
Yeah.
So it's an important factor for NVIDIA's future. And I think that the guidance on revenue, despite the fact that they couldn't provide any guidance about China, was insane. I think that they guided for $53 billion for the next quarter. This is insane.
Oh, actually, I'm sorry. I don't know for sure. That's one of the numbers
it was like
I had
$53 billion or something
like that.
It was
in that ballpark.
It was insane. I mean, keep in mind that they just reported $46 billion.
I actually think that this guidance, without any China sales, leaves room for NVIDIA to beat their own estimates and the streets. I saw that they did get an export license for the H20 chips in late July, or maybe it was early August. So right now, China is literally not in management's numbers. If they manage to sell anything into China, it provides an opportunity for them to find a way to surprise to the upside without actually needing to do anything overwhelmingly extraordinary.
Yeah, and I heard the CFO of the company saying that that he believes that the total addressable market in the upcoming years is going to be $4 trillion.
Yeah.
So if you annualize the revenue that they reported yesterday, you get like $180 billion or something like that. So that's insane, man. If you start doing the math, it's like, what? A $4 trillion addressable market? Say in 3 or 4 years? Wow.
Yes, and by the end of the decade.
Okay, by the end of the decade. I mean,
so
5 years.
5 years. 5 years.
Okay.
To me, $4 trillion to the top of that range over 5 years is an indication that we are not near the 8th or 9th inning. We are not at the 2 a.m. strike of the clock. We're still partying. Yeah, there's plenty of time for this to keep working.
So yeah, if you believe in those numbers, then it's like Dan Ive says. So it's it's 10 p.m. and we're partying until 4 a.m.
Oh yeah, I mean I might stay even later. No,
and you know that I am a guy that loves analyzing companies from a financial standpoint. So when I see those figures, it is very hard for me, bro. You know, to wrap my head around those numbers, like $4 trillion. And if I annualize the revenue that you just reported, I get a $200 billion revenue. I mean, it's insane. It's like, wow. It's difficult for me to wrap my head around that. So it's difficult.
So I think it's worth mentioning a handful of things because I think that we are probably both going to get questions about this in the near future. People love to find ways to poo-poo this quarter. And I think, honestly, at this point, it's people that have missed out or just don't want to give in to the fact that NVIDIA might be the greatest company of all time. I've heard this a handful of times where, analysts or reporters have mentioned that the growth in the revenue is slowing. Of course it is.
And it is.
Of course it is.
This is a 4-point-something trillion dollar company. So what do they expect?
Exactly. This is just the law of large numbers.
So,
when
correct.
we're talking about
100%.
a sovereign, the
Oh,
sovereign.
by the way,
Yeah,
can you see my screen?
I can. Yes,
Okay, take a look. Yeah, but okay. So yeah,
and that's revenue growth, correct?
correct. The year-over-year revenue growth has been slowing down, but we're talking about 55%, bro. This is the largest company of the world.
Yeah.
So what's not to like here then? This is insane.
Apparently,
this is insane growth.
Apparently, the bears are saying that 55% revenue growth is not enough to justify a multiple that's probably about 30 times forward. I disagree completely. And I would also point to the fact that if you look at the gross margins, which we talked about earlier, at 70%,
it went up quarter over quarter, actually.
You can make the argument.
About that.
Yeah, you can make the argument that there's room for the valuation to expand.
Yeah, take a look at this. Forward P ratio. Yesterday, 35. Today, 32.
Yes.
The stock got cheaper, of course.
There was only a 1% change in the price overnight, but there was a 3 turns difference in the earnings. That is growth keeping up with valuation. That is a company growing in to its valuation.
Dan, the net income went from quarter over quarter, of course, from $18.7 billion up to $26.4 billion, not including China. What is
Not
this?
including China. Yeah.
What is this?
Yeah.
What is this? Is this company cooking the books or something? What is this?
I think they got friends with
This
the
is
BLS.
insane,
They're
brother.
not cooking. They're not doing anything.
No. I mean, I'm kidding, brother. But what is this?
It is the next
So,
phase of the industrial
how can
revolution.
you analyze Nvidia? Like thinking about other companies that were growing, in the past at a rapid pace. This is insane. We've never seen anything like this before. Period. Full stop. And I gotta tell you something. Take a look at the forecast. Nvda'S said today on CNBC, and I mean I disagree for the most part with everything that Nvda'S says, but so far he's been right about the stock and about the company. Take a look at the projected revenue growth for 2029, Dan. 7.5%. 2030, 11%. Nvda'S said today that this is where the birds are mistaken about Nvidia. He says that this company will be able to grow revenue between 25 and 30% year over year for the foreseeable future. The markets have not discounted this. I don't see it happening. I'm not gonna lie about it because I look at the financial statements and the income statement and the balance sheet and stuff like that. So I cannot wrap my head around these figures. But if Nvda'S happens, it will be right about the stock, and this company can keep growing revenue year over year at say 30, 35, 25%. Yeah, there's more room to the upside.
Here's how we could be right. I don't think those numbers include the potential for Nvidia to be selling Blackwells into China. Now, right now, that doesn't seem likely. But if the political atmosphere, the intensity or the tension on the semiconductor space dies down, or maybe you just get different leadership with the next election cycle, it's very well possible that we're going to see the Grace Blackwell series moving into China. Why not?
Yeah, and the Blackwell is like it's a way superior chip relative to the H20, right?
Oh, well, it's the next step. You have the Hopper series, which was the original AI chip, for lack of a better term. You have the Blackwell, which is kind of what we're at right now, and we have Rubin, which is the next step.
Okay.
And that actually was announced to be in the fabs, meaning I guess TSM probably is building them. They're on schedule.
Okay.
Yeah.
Okay. Would you buy here? Would you be a buyer of the stock here if you didn't have any position on Nvidia?
No, I'd wait for a pullback because right now you're at the all-time high.
No.
I would for someone like myself, because Nvidia is going to, when it moves, it's going to move. I would want to see it either break out or come back and retest. I'll quickly
Yeah, I'm about to show.
Let me quickly pull up.
Yeah, I have here. I have over
You
here
have
a
it?
4 hour
Okay.
chart. Yeah. The chart looks very bullish above all the moving averages. I mean, I got news for you, man. This thing consolidates above the 20 and the 5-day moving average, $180, which is also a fat number.
Fat number.
Yeah, there's more room
fat.
to the upside.
Well,
Say that the stock goes down in the upcoming weeks, the September effect and stuff like that. I would be expecting buyers to step in at this rising 50-day moving average, $170 or something like that. I mean, taking into account their report then, and I could be mistaken, and if the chart says otherwise, that's okay. I might be even buying Nvidia puts.
Sure.
I don't see a lot of room to the downside here, to be honest with you.
I agree. I would say if you're waiting for an opportunity to buy something, you can wait for a retest of the 50-day. I don't know if this quarter gave the stock permission to do so. If anything, I think it gave it permission to just trade sideways. But if you haven't touched Nvidia this entire time, then maybe wait for it to give you an opportunity. That's all I'm saying.
Correct. And if nothing out of the extraordinary happens with Nvidia, so if we don't get any bad news, Nvidia can go down 10, 15, I don't know, 20%. The dip will be but up. Yeah, it will be but up. Yeah,
it's interesting. There's a lot of, to me, it seems as though there are a lot of people that want to make the claim, in my opinion, prematurely, that we're already in some sort of crazy bubble. I disagree because in a bubble, there's pure euphoria. No one has anything negative to say. I woke up this morning, and I'm sorry, I know I'm repeating myself, to analysts talking about how the growth is slowing and how the quarter, maybe wasn't that great. And in my mind, if that is, even though I don't think that is a sensible opinion, if that is an opinion that is being broadcasted through the public airways, we are not at peak euphoria. There's still bears that could become bulls. We're not at the top. Like, that's not a sign of the top. To me, that's a sign of us climbing the wall of worry.
Yeah, I wouldn't call Nvidia a bubble. I mean, maybe you can make a case. You can make a bearish. You can make a bear case that maybe the economy goes into a deep recession and stuff like that, and the super big tech companies that are investing, that are buying Nvidia's chips left and right for data centers and stuff like that. They, I don't know, maybe they decrease those investments. No, but I mean, unless something again very weird happens. The demand is still there. This is not an expensive stock.
What you said is actually the only bear case. There were some people pointing out on the call, after the fact, that now all of a sudden Nvidia has some customer concentration risk. I don't necessarily think that's a bad thing for Nvidia when you consider the quality of their customers, but it's also a business where, like, how do I put this? Nvidia is not in a business where you or me can call up an Nvidia rep and be like, I will take 3 GPUs. There's a little bit more complexity and process to it. There's going to be customer concentration.
Can I ask you a question? What customers, what Nvidia's customers are you talking about? Meta, Microsoft?
Yes. So Google? right now it appears
let me ask you. Yeah. Let me ask you something. How many customers those companies have?
Oh, that's
millions.
Not. Yes. Yeah.
So it's like okay. So Nvidia has a large concentration of revenue that is coming from 4 companies. But what are those 4 companies doing then?
Well,
it's not millions of customers that are demanding AI service related stuff. So I don't see an issue there, bro. To be honest with you.
I agree with you, but I also don't see an issue with it because Nvidia is not like some sort of deli where anyone can come and buy your product. It's a much more complicated business to business relationship. And when the demand outstrips supply, Nvidia needs to be assured that your check is going to cash. So in my mind, I think it'd be kind of weird if there wasn't customer concentration in Nvidia given the business. Does that make sense?
Yeah.
In other words, I agree. I'm trying to point out the fact that people pointing to customer concentration as a bear case, they don't quite understand the business of Nvidia.
I just don't see a catalyst in the near term that would have Meta and Microsoft and Google and all of these, big
Well,
tech companies
to be fair,
to decrease their AI investments. So that's,
to be
that's
fair, it
for the
is
most part
5
the point that I'm
companies.
making.
It is 5 companies. And if even one of them needs to pull back, it would create an issue. Unless there was some more demand that could be taken. My point is this, and to your point, unless these customers have a massive drawdown in the stock or their core business stops working so that the shareholders of the hyperscalers pressure them to find fiscal religion, right now there is no indication that the checks are going to stop being sent to Nvidia for these chips.
Okay. Yeah.
Yeah.
Perfect. I agree with that. Take a look. I have a level, an interesting level to the downside for you, Dan. Take a look at this. This is an anchored volume weighted average price line, an anchor VWAP that comes from April 7th. On that day, Nvidia went down to $87. So the average market participant that started a position in Nvidia on April 7th and that has been averaging up on those positions has an average price of $140. Say that, I don't know, something happens, something goes wrong, we get a very I don't know, super harder than expected inflation report or whatever, or Powell doesn't cut rates in September, or I don't know, whatever, any situation, you know, that the markets could be freaking out about, or if we happen to see a decent correction in September in the markets, and I am knocking on wood, and for that to happen, I would be an aggressive buyer of Nvidia at $140.
Why not?
Yeah, because I think that these market participants, these buyers, should be defending price. Should Nvidia go down there? And I'm not saying, okay, don't freak out. I'm not saying that Nvidia is headed down to $140, but it's a level of interest in case we see why not some sort of decent correction in the case of Nvidia. So yeah, I think that we did cover Nvidia.
No, that wraps it up really well. We mentioned CoreWeave, and I'll quickly talk a little about that. For those that are maybe not super familiar with the story, they are basically providing NVIDIA grade AI infrastructure to companies that cannot build their own due to the cost of it.
So what is that about then? Like, so they are like, offering chips to some company. They're like
no. They operate the data center.
Data center equipment.
You buy compute from them.
Oh.
So what's going on is that Microsoft, at the time of their IPO not too long ago, is a 62% customer. When Azure had so much demand that Microsoft couldn't handle it in-house, they would send the work to CoreWeave. So they're processing AI tokens, or requests rather. They're processing AI requests.
And what was the mention? What was exactly the mention?
Yes, so as we alluded to, they got a call out on NVIDIA's call. They are going to be bringing the best of the GB or Grace Blackwell 300 AI rack, which to market, which promises a 10 times inference uplift relative to the H series. They're also going to have...
They are buying those racks from NVIDIA, right? And they are leasing those racks.
Correct. Okay. And they're going to be the initial adopter of what's called the Spectrum XGS, which is just another part of the NVIDIA ecosystem, part of their hardware stack that allows for these GPUs to communicate in such a way, in the fast, high bandwidth way that permits AI compute.
Okay.
In other words, CoreWeave is about to have access to something that the rest of the market isn't, and they're going to provide everybody a first look at NVIDIA's roadmap and Blackwell in real time in the wild. This positions CoreWeave to have quick monetizable access to NVIDIA's latest and greatest. With questions swarming around return on AI, the CoreWeave story, understanding how they make money off of it, is pretty simple, and demand isn't a concern given their relationship with Microsoft and the fact we saw Azure grow at 39% last quarter. And then finally, this also subtly dismisses the concern that CoreWeave's technology, their AI stacks, are going to grow outdated quickly, just as we go further down the Blackwell and then eventually Rubin ramps. Because this call out and this partnership with NVIDIA is clearly something that NVIDIA plans on maintaining for the long haul. And I think that was a concern that some people had, where they're like, oh, well, it's great. So CoreWeave has all these H series. What happens when the GB series comes out? What happens when Rubin comes out? This call kind of showed you, well, NVIDIA plans on selling them their latest and greatest to show the world what it can do.
wow, this is very bullish for this company from a fundamental standpoint. I didn't know any of this, so tomorrow I will be keeping an eye on the convergence of the 20-day moving average and the 100-day moving average, $107. Keep an eye on this level, guys. $107 coincides with a previous level of support that acted as such on 2 occasions before. I think that CoreWeave consolidates above $107, and there could be more room here to the upside, maybe up to the 50-day moving average at $127. And I think that near $107, we have an interesting anchor VWAP. Let me pull that up quickly. Let's see what I got here. Let's go see. This is Nvidia. Let me pull up here CrwD. And yeah, the chart doesn't look good quite yet, but take a look. So this is an anchor VWAP, an AVWAP, an anchored volume weighted average price line that comes from the IPO of CoreWeave.
Nice. From
the day in which this company started trading. And we have buyers, as of now, trapped at $107. This is a big deal. So the average market participant that started positions in CoreWeave from its inception to the markets has an average price of $107. So if those market participants start to defend price and start to act like a potential demand zone, I mean, there's more room here to the upside. And we have an anchor VWAP that comes from all-time highs that is signaling $122. So it is very close relative to the 50-day moving average that I just pointed out at $127. So I think that, yeah, CoreWeave consolidates above $107. And be careful, because this was a very, very, very positive development for CoreWeave. Yeah.
Yeah.
So
let me just share with you this chart. I was also looking at CoreWeave.
Okay.
This is a 6 months daily candles here. It's retaken the 5-day exponential and the 13-day exponential. It's about to try the 21-day SMA, and the MACD is about to have a bullish crossover, which just means basically with the exponential moving averages, especially the 5 and the 13-day, I'm measuring short-term momentum. The MACD is more like intermediate. What I'm seeing here is that if we can get the 5-day to come through the 13, meaning that would be a bullish 13-day exponential moving average crossover, and the MACD signaling or having a bullish crossover where this red line overtakes the green signal line, the trend line overtakes the signal line, in my mind, that would be a clear indication that the momentum is shifting.
So above $107?
I mean, yeah, that's probably where it ends up. I would be if it gets to $107 tomorrow in the next couple of days. I don't think there's a way that the 5 and the 13-day don't cross over bullishly, and I don't think there's a way that the MACD doesn't have its bullish crossover.
And of course, the markets are trading at all-time highs, and September is about to kick off.
But to be usually
fair, yeah, but I wanted to say something here. So, this was a very, very positive catalyst for CoreWeave. So don't be surprised of seeing the markets going down, including Nvidia, because of seasonality and whatever, and this stock going up. This was very positive. Very, very, very positive.
To be fair, CoreWeave got smacked after their earnings that weren't terrible. The revenue growth was crazy. I think a lot of the weakness had to do with the lockup period on insiders from the IPO expiring, which implied that a lot more shares can enter the float. So there's no reason to believe that when CoreWeave reports next, that they won't have a similarly amazing quarter. And if they do, there's no reason why it can't play catch-up in a very big way. But that doesn't mean that you should just go out and buy it tomorrow. You can use technicals to help guide your entry. I'm just making the point, and I think you are too, that sometimes the fundamentals of a stock don't necessarily match what's going on in the chart. However, I think the weakness in the chart has more to do with a financial engineering thing going on with regards to share count and float than it does with the fundamentals of the business.
Gotcha. I have a good question for you. Say that I tell you today, like, hey, Don, you know what? This is a bubble. Artificial intelligence is a bubble. It is about to burst. It is going to burst in 30 days. What would you think? What would you say would burst the bubble? if I told you that, hey, I can see the future, in 30 days, we're gonna have this bubble bursting. What bear case would you point out?
You would need to see one of the hyperscalers say they're no longer going to put money into it or pull back significantly. If you told me in 30 days the bubble was going to pop, I would say it was because that Google came out and said, we can't spend on this. We don't think it's worth it. And I think that would cause people to really rethink things.
Which would imply that we have a data centers bubble, because data centers are being built up all over the place, and I think that this is actually, and this is something that you and I have talked about. This is actually helping the GDP of the country, right? So these mega tech companies investing left and right on artificial intelligence is helping out the economy. No doubt about it, right?
It's almost...
So it would be catastrophic even for the economy as a whole.
Nvidia's contribution to GDP is almost as amazing as Taylor Swift's a couple of years ago. Almost, not quite.
She's getting married just like you.
No. Yeah, no. You're right. In fact, I think there's reason to believe that the U.S. economy isn't very strong from a traditional standpoint. If you look at certain consumer baskets, you look at certain segments of the stock market, you can make an argument that there is some strain, there isn't a lot of growth. But because of all of the investment going on in AI and all of the business being done in the enterprise economy, no amount of ugliness in the consumer economy is going to matter so long as this AI build out and this business to business boom is occurring.
Okay, but what situation would have to occur that would force Google to decrease their AI investments, or Meta or whatever, or Microsoft?
They would need to determine that either demand for AI requests is slowing, or that the fundamental assessments of the economics, because right now, Jensen has talked about how for every dollar you spend on an AI Blackwell chip, you will generate $4 or $5. That's the return profile. They would need to determine that maybe
these companies are seeing like super solid results when it comes to their AI investments. That's why no one has slowed down on their investments. I'm talking about Amazon, Microsoft.
Amazon.
I mean, we're trying to make a bear case here, right? Because
correct.
It's fair,
Amazon,
right?
Amazon is sort of, kind of pulled back. They're kind of focusing more on their own solution. At least that's the message that some people are starting to permeate. I don't really think that's true. I would say that there would need to be a fundamental rethink of the return on investment, because Alvaro, right now, the only company showing a real return on AI investment, like close to what we have anticipated,
Meta,
or what has been promised, is Microsoft, Palantir, and you can make an argument for Meta. The issue is that it's not the issue. If you want to poke holes, you could say that the economy has been really good for a really long time and advertising is their core business, and AI has just enhanced it. Which I guess is the point. I don't know. I think I'm being too detailed. I'm being too ticky.
No. That's okay. That's okay. Something breaks in the economy, which I'm not saying it's going to be the case, but something breaks, like very, in a very negative way. Do you think? Do you see these hyperscalers, like backing down their AI investments?
If something systemically breaks, so we might be having an error in translation. In my mind, if something systemically breaks, that means no one has a choice, and you just stop.
Okay, so that would pop the bubble.
But is it
in the near term?
Sure. I guess
near term.
Two things can be true.
We would be buying. You would. I don't know. We might be, buying. We could be buying Nvidia at $100 again, or Palantir at 90 or 80 or whatever. You never know.
Well, two things can be true. We can be in a bubble and the technology still be real. To your point,
correct. That's what I'm saying. Exactly.
Yes. If the bubble pops, then you're going to get a chance to buy Nvidia, Palantir, or whatever your favorite name is.
We had a bubble in the year 2000, but the technology was real, of course.
Right. But to be fair,
there was a purge inside the bubble, so the good companies made it alive.
The issue, and that's the thing. That's why I don't think we're in a bubble, because if the bubble popped tomorrow, everyone knows exactly what stocks to buy. If we were in a bubble, there'd be so many AI names, so many this, that, we're doing this, like you'd see everything fall, and you would have no idea what was going to survive and what wasn't.
Correct.
Right now, if the bubble pops, you know to buy Nvidia, you know to buy Palantir, you know to buy Meta.
Microsoft.
You get it. Like, we have to get to the point to where if the bubble pops, we see 200 stocks fall 30, 40%, and we have no idea if any of them, including the ones that we know, like Nvidia, Palantir, etc., are going to survive. So in my mind, that's why we're not in a bubble. There's just not enough. There's not enough. It's weird to say this. There's not enough hype in names that have no business being in AI.
Correct. So the markets have been awarding the companies that are really making money out of this.
Correct.
Correct. I mean, there's a bit of speculation in some numbers, of course, but these are real companies that are making real money. Even though we can, argue the multiples, which in my case, I don't like the multiples of Palantir and stuff, but it's a real company.
I don't know.
Real money.
I agree with you that, like, we can talk about the valuations of individual stocks being too high or too low. But in my mind, when I look at charts of the S&P 500 and I look at charts of the valuation next to the price and I look at what earnings does, it's the average valuation of the market is going up because the reliability and absolute value of earnings is going up. When the S&P 500 was netting
We're trading at 22 forward earnings, I think. The S&P has
right. And listen, that is historic.
Something like that.
That
it isn't cheap, but it isn't insanely high.
I'm not saying that 22 times.
And if you exclude, by the way, the Magnificent Seven, you get a forward P of 15, 16. So.
Oh, I thought it was more like 17. Either way.
Whatever.
So the point being is this. When the S&P 500 had $100 in EPS, however long ago that was.
$300 for next year.
For next year, right.
Yeah.
The S&P 500 was trading at like 15 or 16 times earnings. Now we're netting 230. Now 260. It could be $300 of earnings next year. People are like, "Oh, we should be trading at 18 times earnings," and I'm like, "Why?" There's more we have more dollars of earnings. They're more reliable. The economy is less cyclical. We should be paying more for the earnings of these companies.
And these companies are putting out some figures that we've never seen before. What Nvidia is doing is something that we've never seen before at the scale, or taking into account the scale of Nvidia. So,
yes. But do you see what I'm saying, Alvaro? The fact that we shouldn't be expecting an opportunity to buy the S&P 500 at 15 times earnings so long as the absolute level of earnings doesn't revisit what it was at 15.
I mean, the S&P bottomed out in 2009 at a forward P ratio of 14, which was a disaster. But we didn't have.
You said 2009, right?
2009, correct.
Yeah.
That was we bottomed out with a forward P ratio of 14 approximately. So, but it was a disaster, and we didn't have the tech companies that we have, as of now, that we have now.
But not only that,
the economy has changed.
100%. But also, like, in 2009, I don't know what the absolute level of S&P 500 earnings was or what the growth rate was, but it wasn't 260 like it was in 2024, and the growth rate wasn't low teens, right?
Correct. Yeah,
so
correct.
You could make an argument that after the great financial crisis in 2009, sure, 14 times earnings was appropriate. But this idea, because I think there are...
Buy the deep opportunity if you're in the midst of a crash. Yeah.
Right. And I get the point I'm making is I think some people go wrong when they think about Nvidia's price to earnings multiple and they're like, it needs to be what the market's is, or the market needs to go down. It's like, it actually doesn't. No. Because if things keep going the way that they're going, why would the market feel like we need to pay less?
Yeah, the issue with Nvidia is that we don't know where the top of the demand is. So the markets will keep paying Nvidia, higher multiples. It is just what it is, and they are killing it. It is what it is,
Absolutely.
We are going to review CrowdStrike now, right?
Yeah, CrowdStrike was a in my opinion, fantastic report. I day
traded the report yesterday, so when I saw that they up-guided for 2026, I immediately bought the dip. I got 25 shares at around $398, and I closed a position at $412 or something like that. It was an after-hours trade, a successful one. It was a good report.
Very nice. I don't really trade after hours, but CrowdStrike is one of my 5 largest positions in individual accounts.
Okay.
I want to try to walk the audience through what I think happened with CrowdStrike's earnings. So we got the report. and people saw that the non-GAAP gross margins had compressed a little bit, almost by 2%, and the revenue maybe wasn't as strong as people wanted it to be, and the stock dropped, I think 5 or 6 to 8% at one point overnight. They got on the call. Management explained that these ongoing incentive programs after the 2024 summer outage are to blame for the margin compression and the maybe slightly lower than consensus guide. But I think the reason the market turned the next morning, as they thought about it, and like after the call,
it was yesterday. It was yesterday after hours.
Right.
Yeah,
I think the reason the market turned,
away,
I think the reason the market turned is because they realized that these incentive programs that were causing the headwind were probably closer to the end than they were the beginning of an impact on the earnings. And the stock went into this quarter 18% off of the prior all-time high. The market's like, listen, we priced this in. What are we doing? This is an opportunity. And as people woke up the next morning and they're like, wait, this earnings report was good, and we don't have any reason to believe that the business is going to get worse. If anything, it's going to get better from here. People bought it up, and it ended the day up 4.5%, 5%.
Yeah, it went up today 5%. Yeah, can you see the 4-hour chart of CrowdStrike?
Yes, I can.
Yeah, this stock is still trading way off the highs, so it is 15% of the highs. Do you see more upside here? Because it is about to make a test of a very important level.
Did you ask if I see more upside here?
Correct.
Yeah.
All right. Yeah, I agree with that. I think. Yeah, sure.
What do you mean you think?
No, I
This is a
think so.
table pounder.
I know, but take a look
Alvaro,
at this.
I think it was 2 podcasts ago we both agreed there is no bear case for cybersecurity.
Yeah, I agree with that for the most part. I am actually long as of now, Palo Alto. And yeah, you could, I mean, regardless of whatever happens in the economy, companies just cannot afford decreasing their investments in cybersecurity. It's just, it will not happen. So
I run a small, like with my Robinhood money, I try to run a model portfolio as if it was as if I could only hold 15 positions, and I try to give myself exposure to the themes I like.
Okay.
Right now, of those 15, CrowdStrike is the biggest. I put it at a 7.5% weight in the portfolio.
Okay.
That's how confident I am personally, and this is just this is not life-changing money. This is my Robinhood. Like, I'm trying to pretend as though.
Would you say that, I think that they already asked you this, but I'm going to do it again. Do you think that within the cybersecurity space, is this best of breed?
Oh, yeah.
Okay.
Everyone
Better
is
than Palo Alto.
Okay. So much. Oh, I don't want to be rude. My opinion,
You
yes.
were,
but
whatever. It's okay.
yeah. Well,
Because I'm long Palo Alto, but okay.
When you're right, it doesn't matter.
Okay.
No, but I'll be honest. I'm still long Fortinet. I'm long Palo Alto. I'm long CyberArk, and I'm also long Fortinet or CrowdStrike, as I mentioned. I'm tempted to buy SailPoint.
Salesforce, you mean?
No, SalesPoint. It's another cybersecurity company that got brought back into the public market by Tom Bravo, I think 4 months ago.
I didn't know that. Never heard of it. Okay, I'll look into it. Take a look at this 100-day moving average in blue, Dan. $447.
Yeah.
It is the next potential gap to the upside. But take a look at how this 100 DMA is coinciding. Let me show you quickly here with an anchor VWAP that comes from the April low. So this is an interesting level that I am keeping an eye on. So take a look.
Okay.
If I can share my screen again. There you go. There I am. Where is it? Okay. Take a look. This is an anchor volume weighted average price line that comes from the April low. So back in early April 7th.
That was the tariff tantrum. Yeah.
Correct.
Double bottom.
CRWD went down to $297. So the average market participant that started the position on CrowdStrike at that price and that has been averaging up on their positions or on his
that's interesting.
His and her position has an average price as of now of, guess what, $445 ish. So we have the convergence as of now of that anchor VWAP that comes from the April low with the 100-day moving average. So I'm thinking that if the bulls of CrowdStrike, let me share my screen once again on my 4-hour chart. Yep. So I'm thinking that if the bulls can consolidate and sustain price above this 100-day moving average that as of now is signaling $446, maybe potentially the door opens for a test of the 50-day moving average in green here at $462.
Yes.
So this would be very bullish in my opinion, and there could be a potential trade to the upside over there in the case of CrowdStrike. Would you say that this correction is over with this earnings report? Because when CrowdStrike reported yesterday, the stock was down 20% exactly then.
Oh, okay, I was wrong. I thought it was down 18%. Okay, yeah, no, then down 20%.
Correct.
I would say that it is. I'm gonna add on to what you shared here. So
Okay.
this is a 1 year daily. I got the 200-day in orange and I got the 50-day in white, just as you had. So we're going to zoom in now on the last 3 months. It opened damn near to the penny on the 200-day and found a whole lot of demand. A few days ago, MACD, for the first time since July 9th, turned positive. And you also have RSI, now above 50, trending towards 60. This to me, and let me just check the volume real quick. I mean, that's pretty heavy volume relative to the past month or so.
Mm-hmm.
In my opinion, that means that the stock has run out of sellers in the short term and has found some buyers. Another thing worth pointing out is this candlestick in particular. I call it a bullish engulfing candle, where you open below the prior candle, you rise all the way through and close above the prior candle. So in other words, this candlestick engulfs the prior candlestick, which means that buyers...
And the other three, a bunch of
candles. No, that's crazy. That is another... I don't know if there's anything special associated with that, but you are correct.
Yeah.
In my mind, or at least the way that this technical candlestick was explained to me when I was learning about them, was that, the stock had been in a range or the stock was trending one way or another. And for one reason or another, whether it be the bulls or the bears, in this case, the bulls, completely took control. So now it's up to them to get a little bit of follow through. But if you were trading this like purely on a technical standpoint, you would have bought this close and you're going to use the low from today to be your stop. That is how a lot of people would have traded it. That is how a lot of people would have traded the stock from a purely candlestick technical point of view.
Okay, perfect. Question before we wrap it up.
Yeah.
September is about to kick off in a few days. We have a correction, and I am not calling out a correction, okay? Mind you. Say that, I don't know, the S&P 500 goes down 5 or 7% or 10%, and these stocks, go, down further. Nvidia, CrowdStrike, CoreWeave, I don't know. I mean, CoreWeave is down a lot. Off its all-time highs, and also CrowdStrike and stuff like that. But say that we have a general correction in the markets. What stock would you be buying? Would you be more interested in buying in case of a correction in September?
Of the three
at way lower prices, without going over the technical charts once again.
Of the three we've talked about, or just
correct? Yeah, CoreWeave, CrowdStrike, and Nvidia.
That's a really tough question. If I didn't own any of them, it would come down pretty quickly to Nvidia or to CrowdStrike. And I say that because CoreWeave, the bear case on CoreWeave is that if we eventually find some sort of equilibrium on demand for AI tokens, that they're going to stop getting as much business from the Azures of the world. So in a crazy world where we are concerned about demand in the economy, CoreWeave is going to be the last one to recover. So I would probably go with CrowdStrike just on the premise that there is never going to be a question in my mind that corporations around the world are going to stop buying cybersecurity products.
It's a super important aspect of the business that corporations need to care about. So yeah, I agree with that with you. So I agree on that with you. So there's no cyclicality on cybersecurity. These companies are not cyclical, and this is a super important expense that every corporation needs to protect, I guess. So yeah, I mean, I am very bullish on cybersecurity. Let's just put it away. The valuations are very high, to my taste, but yes.
But for a reason, right?
Yeah. For a reason.
Right,
yeah.
for a good reason. So let me ask you
this.
this.
Because the markets believe that there is a lot of growth ahead for these companies, for these corporations.
Not just growth, it's the reliability of it, the consistency. There's a lot that goes into a higher valuation other than just an absolute gross number, than an absolute revenue growth number.
Yeah, but if you trade at higher multiples, that implies that the markets are not seeing where the demand for your products and services.
Totally right, but
could be at, right? So
my point is that Walmart and Costco grow at like 3 or 4% a year, but they're sporting 30 to 50 time multiples.
That's insane. I would never justify
no
Costco's and Walmart's valuation. But yeah, I get what you're saying.
The reason being is their
revenue growth is 5%, 6% year over year, and I don't know, Walmart is trading at I don't know, like 39, forward earnings.
Yes, but it's because of the consistency, right? You can make the same, and this is why I don't get crazy or get as upset as some people do about the valuation Apple trades at. Apple's one of the most consistent companies on the planet. It can have a 30-time multiple. I mean, listen, it's okay to be worried about it.
I'm sorry. If Nvidia trades at 30 times forward earnings, I'm not willing to pay Apple, a forward P ratio of 30. When I have Nvidia with like unbelievable growth, potentially still ahead of itself, trading with the same multiple. So
Alvaro, I don't own Apple. I'm just making the point that the market has let Apple trade at like a high 20s, 30 multiple for the past 5 years, and the only reason you can justify it is by talking.
Buybacks
talking about the consistency.
Yeah, correct.
So how about this? Before we leave, one question for you: if we do see a correction in September, what causes it?
Seasonality or a super hotter than expected inflation report, which I have my doubts about that.
So when you say seasonality, because honestly, I kind of felt that way about the CrowdStrike sell-off. Like in July, people just kind of started selling it. Same with software. So do you think we're just going to like wake up 2 weeks into and let's just say the inflation stuff is nothing burger territory. Do you think we wake up in September, we're down 4 or 5%? People are like, it's September.
Yeah. I've seen that before. I think that seasonality could be about a kick in, and we could have a 5-7% correction or something like that.
In my opinion,
if nothing, weird happens, it's going to be a buy the deep opportunity.
In my opinion, we actually
Santa comes over.
In my opinion, we just saw it in August. There were a number. I mean, you watch CNBC the same as me. The amount of times that we heard people say, and why is Salesforce or why is this software stock down? And the person shrugs. It's August. Like it's an answer. It's not a great answer, but I suppose it's better than saying there are more sellers than buyers, but it is an answer.
Yeah, I mean, I don't feel bearish as of now. If the short, start to tell me otherwise, and some important levels of support are broken into the downside, I'm going to be buying put options. But I am a technical guy, so we are in an uptrend above all the moving averages. So I feel bullish. If I see that the shorts morph into something different and we start breaking important levels of support, then I would turn bearish. But I don't see anything bearish as of now, to be honest with you.
I think for me,
and I'm expecting a 5% pullback, 7% pullback, hopefully, knocking on wood. Okay, that would open nice trading opportunities, but I don't see anything bearish as of now. I am a bit concerned about inflation, maybe next year or something like that, but we'll see about it.
Let me try this take for you. Mm-hmm. What if we sell the interest rate cut and that causes the 7% decline? Could be. I honestly think we might
buy
get
the rumor, sell the news. It could be the case. Mm-hmm.
We'll sell the cut, and then the next day we'll get some report that makes everyone feel as though we shouldn't have cut, or that it's too late, and we'll sell.
Yeah, Could be the case. Yeah.
Yeah.
Actually, when the Fed cuts rates, and the time that has passed between the last rate cut and the new rate cut is something like more than 5 or 6 months. We usually have a 1% decline over the next 30 days. So yeah, it could be the case. By the way,
that's an interesting statistic. I didn't realize that.
Yeah, that's the case. Yeah,
very cool.
1 month out, we're like 1% down. 3 months out, plus 2%, and then 1 year out, 20 out of 20 times, the S&P 500 has been up. Yeah, that's an interesting stat.
That's cool. One more thing before we go, because we're getting close to the end of the year. If we have another year where, let's just say the S&P closes this year up 11%, 10, 12%, that would be the last 3 years, 20% gain, 20% gain, plus 10% gain. I don't want to hear and we've had 2 bear markets in that, or no, 1 or 2.
Yeah,
2022,
and I mean, we almost had a bear market this year because the S&P 500 dropped 20%.
I'm going to call the tariff tantrum a bear market.
Okay.
Let's just, and we had a bear market in between. One of the quickest ever.
Correct.
People need to get comfortable with the idea that it's a bull market. There's a lot of people that for whatever reason don't want to. They don't want to get comfortable. They think it's all too easy, or they just don't believe it. But if the stock market gives you 3 consecutive more than 12% gain years, you're in a bull market.
Yeah, for sure. This is a bull
market.
Stop
fighting it.
No doubt about it. This is a bull market. No doubt about it. No.
All right. Well, that's all I got. I had a really good time chatting with you today.
Yeah. So it was a super nice chit chat. So I guess that we'll see the guys once again next Thursday.
Next Thursday. Happy Nvidia Day, you guys.
There you go. Bye, guys. Take care.
Take care.
Bye.